Hi everyone, I'm Emily Carter. On this channel, we don't chase loud stories or flashy promises. We focus on companies that quietly do the work and keep the system running. Today, I want to talk about a company that doesn't advertise its AI, doesn't promise miracles, but sits right at the core of the financial system. Because every time you pay with your card, someone in the background gets paid. And today, we're talking about one of those silent players, Fiserv. Fiserv doesn't look like a typical tech company. You don't download it and you don't interact with it directly. But think about this. You walk into a store, you tap your card, and the payment goes through. In those few seconds, complex systems are working quietly in the background, and one of those systems belongs to Fiserv. Fiserv runs payment processing, manages POS systems, and provides core banking software for financial institutions. It doesn't sell to consumers. Instead, it sells to banks, merchants, and payment networks. And that's why when Fiserv works, nobody notices. But if it ever stops, everything does. This is where things get interesting, because Fiserv doesn't brand itself as an AI company. You don't see flashy demos or buzzwords everywhere. And yet, the truth is simple. Fiserv cannot function without AI. Every transaction is analyzed in milliseconds. The system decides whether a payment looks normal, suspicious, or potentially fraudulent. These decisions are not made by people. They are made by AI models. And mistakes here don't hurt marketing budgets. They lose real money. That's why this isn't experimental AI. It's production-grade infrastructure, running quietly but doing critical work every single second. Now let's talk about Fiserv's main growth engine, Clover. Clover started as a POS device, but today it's much more than that. It tracks sales, manages inventory, and uses data and AI to help small businesses operate more efficiently. Right now, Fiserv is pushing Clover in three directions. First, expanding its reach among small and mid-sized businesses. Second, embedding more software and AI into the platform. And third, turning Clover into a full operating system for businesses, not just a payment tool. Once a business runs everything through Clover, switching away becomes very difficult because payments are no longer the only thing flowing through the system. Now let's talk numbers, because this is where Fiserv really shows its strength. Fiserv generates around $21 billion in annual revenue, and this isn't one-off revenue. Most of it comes from recurring contracts with banks and merchants. More importantly, the company is expected to generate roughly $4.2 billion in free cash flow this year. That's real cash, not accounting profit. At today's valuation, Fiserv trades at a forward PIE below 8, which is extremely low for a company running critical financial infrastructure. Instead of paying dividends, management uses that cash to buy back shares. Over time, the share count has steadily declined, meaning each remaining share represents a larger piece of the business. Margins are under pressure right now, and management has been transparent about that. They expect margins to bottom out during this transition period and gradually recover as investments begin to pay off. So financially, Fiserv isn't struggling to survive. It's deliberately absorbing short-term pain while continuing to generate billions in cash. That's not weakness. That's a controlled reset. So if Fiserv is this important, why isn't everyone talking about it? The answer is simple. This is not a show company. There are no big product launches and no dramatic stage presentations. Fiserv's customers are banks and financial institutions, and they care about reliability, risk reduction, and system stability. If those boxes are checked, hype doesn't matter. And in the market, the most important companies are often the quietest ones. Now let's set expectations. Fiserv is not in a clean growth phase right now, it's in a reset. Management has been very clear that this year is a transition year. So instead of thinking in extremes, it makes more sense to think in scenarios. In an optimistic scenario, the economy stabilizes, Clover continues to grow strongly, and AI investments start improving efficiency. In that case, the stock could see around 15 to 20% upside. In the base scenario, growth stays in the low single digits, earnings remain under pressure, and investors stay cautious. That points to a more modest 5 to 10% upside. And in a pessimistic scenario, the economic slowdown deepens, margins stay compressed longer, and confidence takes time to return. Here, the downside could reach 15 to 25%. This is not about speed, it's about execution and patience. Fiserv is not a stock for excitement. This is not a breakout year. It's a rebuilding year. Management is fixing what was delayed, investing where it matters, and resetting expectations. That usually doesn't look good in the short term, but infrastructure companies are built for cycles. If this transition works, the real story doesn't start this year. It starts after it. I'm Emily Carter, and I'll keep looking for companies that quietly prepare for the next cycle. See you in the next video.